We're going to go ahead and begin with the case study on Statoil, and there will be two speakers, both who co-authored this particular study. Thomas Stenvall from Hetco Trading and Richard Gordon, who's president of Gordon Energy Solutions. The floor is yours.
Thank you. I see that we are the lucky winners of Friday afternoon after lunch. It's a great pleasure. So hopefully we'll try and keep it fairly brief and informative. It's interesting to have looked at Statoil, how similar it is to Petronas in some ways, as a successful example of how a producing country's NOC can be structured. And as we will try to sort of conclude with, we have some key lessons that we think we can draw from Statoil to pull to other NOCs, starting new NOCs. And I think the case of Kazakhstan is quite interesting because I think they actually have understood some of these key lessons and introduced them to their own structure. But before that, let's start with. Before that, let's start with a little bit of history on Statoil's evolution. In our paper, we try to distinguish between 5 phases of Statoil's evolution, and in order to sort of keep it in 15 minutes, I've chosen a few key points at each stage of this evolution that I think are critical for reaching what Statoil became and is today. One key phase is what Norwegian oil was before Statoil. The evolution of Norwegian oil sector only started as sort of the last province of the North Sea when it evolved. And I think there were 2 key things that happened that facilitated a solid national oil company. One was the time that the Norwegian government took in developing the regulatory structure that supported Statoil and supported the whole industry. And the way that was developed was quite clever, in my humble Norwegian opinion. And also what happened also is in part what happened to Statoil, in that the Norwegian government entered a dialogue with the IOCs in order to learn what the regulatory structure should be. So rather than just trying to sort of think of it in a sort of abstract format, the Norwegian government entered into a direct dialogue with IOCs and said, what do you think regulatory structure should look like? And then the regulatory structure was developed as a result of that. The Norwegian government was in the privilege, of course, that it could take a year and a half to develop that regulatory structure because it didn't have the immediate, fiscal requirement of oil revenues as urgent as some other countries might have. I think the other key point in the before oil part of the study and of sort of Norwegian oil history is to decide, why do you have an NOC, and why do you ask yourself, as a country, a developed country, why do you start NOC rather than having just a private company that can do it for you? I think there are 3 key lessons here. One, there is a history of national resource control in Norway, and clearly that fits in with this sort of social democratic welfare structure of Norway, in which you certainly value, what should we say, state-owned things better, more than in this country. Secondly, there was clearly a limited availability of capital, private capital, in Norway. Hence, the government had to be actively involved if you wanted to have a national company. And thirdly, because it was a very good policy tool to implement a wider policy that you wanted to of industrial development that followed as a result. The second phase in our study that we sort of define is from 72 to 81, in which Statoil goes through a startup and an evolution phase. I think there are, again, three key points here which I'd like to highlight. One is that Statoil was clearly given a very preferential role in the industry. It was given access initially to half of all fields that were produced, and it had what was called a carried interest, in the sense that it had a free access to ready developed resources. So once the field was delineated, when the field was found and started developed, the NOC could actually gradually increase its share in the field. So it had in essence, a risk-free investment possibility as a company. Secondly, in the startup phase, the company established infrastructure control, so pipeline controls, which is very important. And thirdly, it was able to learn how to develop an oil industry and how to develop fields from the IOCs. So again, Norway was very good at playing pantomime, if you like, with the IOCs and learning by doing, which was a key in this phase. The third phase of Norwegian oil sector and Statoil is what we call the post-adolescence stage. Here, the key points that we highlight is that Statoil gradually became more and more of an integrated company. It was clear from the company's point of view that you want to create a downstream sector into the company. Petrochemical was early on a goal, and then you also started having refinery interests. I think in part by the value optionality of having refining assets and the ability to widen your resource portfolio. I think the second important part of the 81 to 2001 phase of Statoil is that it becomes an operator of the fields. So it actually has the responsibility to run fields themselves and takes over from IOCs to run the company. So it really becomes, in this phase, Statoil really becomes a proper company, if you like, rather than a passive partner. And it's used its learning period in order to sort of harness its learning period into operating as a company. Combined with becoming an operator and becoming more integrated, there is, if you like, a counterweight that sets in domestically in politics in this period, and that is that Statoil becomes very powerful in domestic politics. It has huge influence on local politics, huge influence on allegiances in regional politics, and steps are gradually taken by the central government to limit Statoil into becoming a commercial operation and nothing more than that. And the key feature in that respect is that the state takes away part of the equity from Statoil and puts it into the sort of a state portfolio. And the third point in this period is that Statoil really starts becoming constrained in terms of its resource potential domestically. And that is what has led Statoil into develop as a company after this sort of middle of 80s period, is that Statoil now has become resource constrained domestically and then has to hunt outside of Norway eventually for assets. It is this resource constraint that then drives the company into privatization just after the millennium. Resource constraint combined with a sort of repeated failure of project management. And so you need to improve the sort of governance and incentive structure of the company. I think there was a combined interest from the government and from the company to sort of improve its governance structure. And meanwhile, there's two combined strategies. One is becoming international, the second becoming gasified. It's the two strategies that Statoil really evolves. Then final phase in the Statoil evolution is the Statoil we will see today, and we will probably see in a year's time in true nature, is what Statoil will become after the Hydro merger, when the two state-owned companies, if you like, Hydro being much less state-owned than Statoil in Norway, become one company, and then these companies together have to drive to explore outside Norwegian boundaries in order to really have a resource to develop. So to just sort of conclude the historical section of our paper, I think there are two key lessons. One is its evolution has largely been a function of the underlying resource base. Throughout, every step has been taken as you face a new resource constraint. And secondly, the role in petroleum policy and politics have reflected throughout these phases, and we'll sort of return to that. This graph, which is in our paper, illustrates the evolution of the gas sector. The line shows the reserves discovered in that year, and the big area shows the cumulative reserves discovered. And you see as these flatten out fairly quickly, already in the sort of early 80s, you can see them flattening out. You see this gradual increase pressure for Statoil to go international in order to sort of preserve its reason for being. And the sort of privatization structure in it is part of that strategy. This chart is a little bit different. We try to sort of track on how we can look at how the role of Statoil has changed over the time of its development. I think there are two key parts to this chart. One is, if I can make this thing work here. One is these three empty areas. I think they're very important in Statoil's case because they illustrate the limits that the government put on Statoil as a company. It didn't want Statoil to be a direct energy policy, did not want it to be a direct foreign policy tool, or wealth redistribution. The government itself took on those tasks based on fiscal revenues from the oil sector. And instead, it allowed the company to focus on other criteria. And as you see, the gray line, you can see how there was the welfare element into Statoil initially, together with economic development, which clearly was a key issue in the initial years, and wealth creation. And as the company has evolved, the role of wealth creation for the company has grown, and the importance of wealth creation for the company has grown, while the role of economic development, if you like, has fallen. And so the two key lessons here is how does the state allow the company to evolve? And it allows it to evolve into a wealth-creating type of structure. And secondly, where does the state allow the company not to be involved? So with that, Rick will also take us through some of the lessons that this has sort of brought us to.
Thomas and I believe that the lessons of Statoil are really profound. You've seen them with Petronas, the gentlemen that were here before with KUFPEC. There are a number of organizations around the world, national oil companies, that have made the successful transition or are in the process of doing so. And in many of those cases, I think some of the lessons of Statoil are part and parcel of how they've been able to do it. First and foremost, though, is that Norwegian policy has consistently been a pragmatic blend of social democracy and entrepreneurial spirit. Anyone who's ever dealt with the Norwegians, be they the shippers, the drillers, the oil companies, or the government for that matter, cannot help but notice that. This blending is truly a remarkable thing. This is what we call political entrepreneurship. Now, if this were only a cultural result, it makes no difference. It would have no significance. But it is not a cultural result alone. That's part of it. But what's also been at work is a multiple series of policy choices by the Norwegian government, which in effect have contributed to the process and made the process work. These can, with suitable adaptation, we believe, be applied elsewhere in the world. The tactical lessons are basically as follows. There are critical, absolutely critical benefits that come from an explicit and consistent policy focus on long-term wealth management. That becomes, in point of fact, whether one wants to call it efficiency, profit maximization, wealth, there is remarkable clarity of purpose that emerges from that focus. And that clarity of purpose is what helps a company like a Statoil or a CNOOC or any other company, for that matter, work its way through all these wild and crazy twists that occur in the worldwide oil and gas industry, such as $15 oil, $70 oil, $15 natural gas, $6 natural gas, etc. Limited non-commercial policy interference in NOC operations is also critical. Don't distract the purpose. That's not to say that these other functions are not legitimate and cannot, in fact, be advanced by the government. But in point of fact, the proper venue for those perhaps lies somewhere other than the national oil company. In particular, with its focus on Statoil with its focus on the Petroleum Directorate and the Finance Ministry. Basically, the government had, in fact, filled in that diagram that Thomas showed you earlier, but it wasn't all NOC's responsibility. It wasn't Statoil's responsibility to do them all. And we would even suggest to you the following sort of theoretical concept. If you were to look at that diagram again that Thomas had put up, it was broken into economic and political criteria and also multiple criteria vertically. To the extent to which an NOC's focus becomes split across all categories, and especially to the extent to which it gets split across all categories to almost no prioritization, the company will become paralyzed, because not all of those goals are mutually consistent at all times. It's very, very important, I think, to keep that in mind. Third point, and this is, again, a critical issue. Competition is a value-adding force. Unambiguously it is. At least in the Statoil case, and we believe that that's the lesson to be learned here. Not just competition from Norsk Hydro, who also was owned by the government, competition from Saga. Not just competition from state-owned organizations, but throughout a vibrant and very competitive IOC participation in the segment as well. So there was a very intensive process of competition, and I'll go even one step further. The UK and the Norwegian systems evolved parallel to each other. As you may recall, there was a British National Oil Company, there was a Norwegian National Oil Company. The competition even went so far as to competition between the UK and Norway, trying to ensure that their fiscal systems and their licensing strategies were always competitive with each other. And I remember those days at Phillips following it, where you'd see explicit comparisons being made. Well, can we raise the special tax rate if the UK's dropping the SPD? You know, what are we going to do about these things? That kind of competitiveness, I think, was also at the heart of Norway's success. Next, the National Oil Company is only one part of what is really a multidimensional package of tools. And it does a disservice to the National Oil Company and will probably contribute to its failure to try and make it carry out all of those functions. This is what I was saying earlier about that diagram. To pressure the NOC into simultaneously handling wealth redistribution at the same time as it's trying to compete with IOCs on an efficient manner is bound to cause problems. And it, in fact, I think has been shown to have caused problems in multiple countries that we've talked about here. Next, the NOC and government policy must be seen as an evolutionary organism. Thomas made that plain as we went through his discussion of the phases. Statoil has been evolving from the very first day, and it's been progressively changing, and so has Norwegian policy, not only towards Statoil, but also Norwegian policy towards the rest of the industry. So what we're describing here is a highly focused national oil company with clarity, the clarity that can only come when you're being competed with aggressively and you've got clear objectives to follow. Looking forward, we're now into the next phase of Statoil's existence, that is the merger of the two companies. It's extremely important, I think, to notice here, there's a common thread in Statoil's experience that I want to highlight for you because it was in fact mentioned by the first two keynote speakers of this conference, the role of strategic alliances as a tool for NOC development and movement into international. The first of those alliance experiences came in, I believe, 1990 for Statoil, when it allied itself with BP. And in discussions with Statoil individuals, they were quite explicit about the fact that the resources were combined of the two companies. It enabled Statoil to begin its international program with minimal additional resources. The Hydro merger is yet another alliance, in essence. That is a merging of two companies with comparable interests. Okay? This kind of lesson, I think, is what will ultimately be applied, and we'll see yet what happens into the future. Thank you.
Thank you. Thank you very much. Next on the agenda to discuss NNPC is Ugo Nkweji. Ugo, the floor is yours.
Good afternoon. I'm about to talk about an NOC that is substantially different from Statoil. Oil was discovered in Nigeria in 1956 and in commercial quantities. And from that time through the 1960s, Nigeria did not have an NOC, and the oil administration was conducted by basically government department regulation and collection of royalties and taxes from IOCs. And 1969, the Petroleum Act, the first time Nigeria came out with a comprehensive law to govern petroleum administration. Two things about that act, actually marked great discontinuity in the industry at the time. One is that that law expressed the option of the Nigerian federal government to keep equity, to take equity interest in any oil venture. Secondly, it gave Nigerians the right to invest in the downstream sector. And then in 1970, the regulator was really separated from the ministry, just promoted as a department, but nevertheless still a part of the ministry. And in 1971, Nigeria was about to join OPEC. And then OPEC requirement was Nigeria was to form an NOC. But it was just happening at the same time that Nigeria had a comprehensive nationalization program. So I don't really know which one was more important to Nigeria forming NOC, because they had a comprehensive nationalization program that cut across all the sectors. And then Nigeria formed NOC, and then the first NOC in 1971, which was the precursor of NNPC. And then, this commercial company was an arm of the Ministry of Mines and Power. And then in 1975, the Petroleum Ministry was created, and the NOC was moved into it. And then in 1977, this is very, very important, in 1977, NNPC was formed out of a merger of the existing NOC, the regulating body, that's DPR, that's the Directorate of Petroleum Resources, and the Ministry of Mines and Power. So the NNPC came out really like big, announced it in a big way, subsuming the ministry itself. And NNPC oversees the federation's interests. The federation means the federal government of Nigeria. And therefore, it is central to the Nigerian economy. It is central because oil exports account for 95% of Nigeria's export revenues and 76% of all revenues, of all government revenues. So NNPC being at the center of that, therefore, is very central to the government. Then in terms of responsibilities, NNPC, like the NNOC before it, was charged with enormous responsibilities. It was supposed to be an integrated oil and gas company from the very beginning to do E&P, marketing, engineering, data support services, training, refining, and pipeline maintenance, maintaining a pipelines network. And right now, NNPC has 11 wholly owned subsidiaries and 2 partially owned subsidiaries. And then it has a growing number of corporate business units. That is the way they organize the corporation, what they call corporate business units, as opposed to corporate strategy units. Corporate strategy units being the subsidiaries. The corporate business units being subsidiaries, and then the corporate strategy units being the divisions within the headquarters that handle various responsibilities, but they're on par in the corporate ladder. Staff strength of NNPC has shrunk drastically from about 17,000 in 2003 to about 9,000 in January this year. The NNP power structure is interesting. The Minister of Petroleum Resources is by law the chairman of the NNPC board. And in the Nigerian peculiar case, in Nigeria's case, since 1999, the president was also the oil minister. He didn't give that portfolio to anybody, so therefore he was the chairman of NNPC until January this year, when he appointed a substantive minister of mines and power. And then basically from that position, the other members of the board include the chief executive officer of NNPC, that is the group managing director, GMD, as I'll call him from now on, and then the 4 group executive directors, and then one of the GMDs, one of the group general managers lower down, who legal, and then the rest of them are government appointed, people basically. And so from that position, the president is able really to keep a tight control of the corporation. The GMD himself was a presidential aide just before he became the GMD of the corporation. So over time, NNPC has struggled with some problems. We're going to talk about some of these problems, and at the same time manage to celebrate some of their successes. And as you can see here, I'm talking about what I call historical problems. And I think one of the major historical problems that NNPC has faced has been the problem of focus. I developed this diagram, with the help of an NNPC official, and we both agree really in regard to the trajectory of NNPC with regard to the functions that it's supposed to play in the industry. You can see what I call industry triad. You have, policy level, where the ministry and the government, and then you have the regulator, which should be separate, and then you have the commercial, which is the NOC, but all of which should be separate in themselves. And then you see the second diagram, there is the ideal structure, what it should be, when everything is separated with NOC. The NOC occupying, the commercial zone. But then what has happened is that for much of its history, NNPC has been this, figure 3, really right in the middle, straddling, the 3 zones. And then what has happened is that in recent times, there has been really recognition that the regulator should become more, should be strengthened, to be more assertive and so on. And that has happened, to an extent, although the regulator is still very, very much incapacitated. But with more, growing assertion of the regulator, that gives us to figure 4. So NNPC is actually moving, inching, but it hasn't gotten there yet. And another historical problem that has focused the NNPC has been the subsidiaries. As a result of restructuring in 1988, and NNPC was subsidiarized. The government at that time said, there should be a need to, for these companies to be really commercial. And there has been some restructuring that had gone on in 1985, but in 1988, the subsidiaries were created to just carry on properly and just wholly commercial ventures and to be self-sustaining. But then what has happened is that what has happened is really interesting and will surprise a lot of people, but I would like to be corrected if I'm wrong. People have really thought of NNPC as a downstream company. But actually, the few successes NNPC has registered actually tend to be upstream. And I'll tell you why. NPDC, is the EMP arm, subsidiary of NNPC. And the Nigerian NOC from the beginning, going back before NNPC in 1971, had always had an EMP outfit, a small one. And it was very effective. They they did exploration, and their most productive periods was between late 70s and early 80s. They actually went and discovered oil fields on their own, wholly Nigerian control. They were the first to explore offshore, Nigeria. But unfortunately, over time, instead of going up, they've been going down. But the biggest success is NETCO, the Nigerian engineering and technical company. Also formed in 1988 as a result of the subsidiary. NETCO has a lot of achievement to its name. It became, a few years ago, the first Nigerian engineering firm to obtain ISO certification. And NETCO too has been completely financially, self-sustaining. It doesn't depend on NNPC. Okay, but then the rest of the subsidiaries have struggled, and the worst case scenario actually being the refineries. The 4 refineries, have been really, really shambolic, completely, and have been a bottomless pit in terms of money being put in, to sustain it. They have not been able to deliver, refined petroleum products to Nigeria. Actually, a study from the Extractive Industry Transparent Initiative between 1999 and 2004 found that the 4 subsidiary refineries of NNPC, with a capacity to process 445,000 barrels of crude oil a day, produce on average below 30% of their production capacity, which is really, really bad. Even though Nigerian demand for refined petroleum, as we stand today, has stripped the full capacity of the refinery, and that will tell you what is happening. And added to all this, the first subsidies and all that create very messy market situation that promotes all kinds of, things. And then, of course, corruption, has been, an integral part of all this. Sorry, I should have. Corruption has been, eating deep into that. Okay, with all these problems, okay, my time is running up. So with all this problem, what happens is that a lot of people in Nigeria, the stakeholders, NNPC itself, the government, have come together and said, look, there's something needs to give way. And then you have this program of restructuring, which Accenture, is involved, together with a Shell subsidiary, and they are, going through, doing some of this. The general objective of this is to make NNPC a world-class, medium-sized NOC, and then fully integrated NOC. So this is really some of the things that have been going on. And one of the things that has happened is the diversification of, one of the new developments being the incoming, coming in of the Chinese and so on. The Chinese, the Indians, the Brazilians, the Venezuelans, the Iranians, and all that. And they're coming into that has really changed the industry. It's changing the industry in a way. But I'll be glad to talk about some of the intricacies of that. But this table is just to show some of the things that because these companies have a number of advantages over the IOCs. This is only one of the advantages I think they have. But we'll talk about that later. Okay. And then finally, the obstacles to reforms, if you can just scan them through, targets are over ambitious, and so on and so on. But I would like to stress that let me just say 2 or 3 things that are most important obstacles of reforms going on. One of that is the stranglehold of the presidency, if you like, the political leadership on NNPC. They have absolutely no independence. The NNPC, the last round of layoffs they did in January, they told the Nigerian public that this list of people who are being sacked has been approved by the president. That's just, that is really, that would tell you the extent of presidential control. And apart from that, they feel duty bound to tell the public so that the president will hear that they're doing his bidding. And then, you also have, regime murkiness, which has been an issue, but some laws are going through now to the National Assembly to try to bring clarity to that. And then, of course, the most important issue there being transparency, which remains a very big problem, but which I describe in a lot of detail in my work. And from all that, I come to, some of these conclusions, some of the ways forward and how to move NNPC, hopefully, to try to take advantage of the change in the air, as this seems to be the era of NOCs. NNPC should, be part of it. Thank you.
Thank you. Ugo, could I get you to stay up here? Invite the other speakers up. Are there any questions for these 2 presentations?
This is on the NNPC talk. What effect do you think the upcoming election would be on the progress and reform?
Thank you very much. I think that is a very, very big problem. In a situation where the political leadership has always had a stranglehold on the corporation, it means that change in political leadership is bound to affect the corporation itself. Because, every new president looks at the GMD has to go, the group general manager, there's the chief executive. When the GMD goes, the new GMD comes, they appoint their own people, restructure, what they call reorganizing. Reorganization is a constant issue in NNPC, and that can harm the reforms. One of the ways to safeguard the reforms will be really for this government to ensure that some of the laws are passed, to create a strong legal framework to improve the autonomy, because these, some of the recommendations that came from the oil and gas, sector committee that was created in the early 2000s was really, they came up with very, very strong and good recommendations, which are now being worked into these laws. Although you can also find that some of their recommendations have been withdrawn and other things, untoward things being put in, which is one of the things that are delaying, the passage of the legislation. So if they manage to put these structures in place, in a few weeks, in the few months that remains, that will help. Another thing that might also help is that this GMD has done, one of the good things it has done. Of course, you will see I criticize him a lot, but one of the good things is that he has really been upbeat, promoting these reforms, talking about them, giving lectures. So people really know. People are aware. More Nigerians are becoming aware of what is going on in NNPC and what is to be expected. And the expectation is there. So a new GMD coming in there would know that, they're kind of duty bound to keep the reforms going. And also, NNPC is trying to promote this idea within the organization. For example, I saw one of the training materials using one of the subsidiaries. And they call that class, they call them the reformers. That is the new recruits, reformers. You see? So those people coming in there, they're being imbued with a sense of mission, which might help. But again, the political leadership is very, very important. But what I can tell you from the lineup of the politicians who are likely going to be president, I don't see there may not be a drastic difference, and I can go into just to say a few things about that. The three top presidential candidates, one of them is the president's, hand-picked person, and I don't expect him to change much. In fact, if the GMD will survive one day, it is if that guy becomes president. But that is only because he's going to put his own person anyway at some point. And then the vice president, who has a very strong political machinery, if he becomes this, he is going to sustain the reform. Although he will fire, it is likely going to fire a lot, but the reform will remain because the reforms are in ways some of his brainchild. Because he was the person, according to government document, who suggested the idea of reorganizing the entire energy sector, oil and gas sector. And so he's likely going to push through the reform, although there will be a massive, change in personnel. And then Muhammadu Buhari is more complicated, but a very clean guy. This is a guy who is likely going to actually fight corruption in minutes. But the extent he will go towards repositioning and restructuring, I don't know. But his presence is not going to harm NNPC or Nigeria. Thank you.
One question about the Statoil. I have heard that at the time of the decision on the merger of Statoil and the Hydro, at the time of the privatization of Statoil, the government has decided to keep its share of at least 2/3 of the Statoil. And upon the decision on the merger of the two companies, this ratio has been reviewed, and so I have heard. And this review implies that at the moment the Norwegian government is looking to increase its influence over the national oil companies, and at the same time, are they giving the negative reflection upon the past decision on the privatization of Statoil?
I think there's a touch of domestic politics involved. The current government is certainly much more left-leaning than the previous government during privatization, and hence the shift towards increasing the share could be read in part because of that. To suggest that Statoil will become purely state-owned again, I don't think that's a possibility. And I don't think there's any structural real change in the position of the Norwegian government in relation to how Statoil is owned in a sort of public-private manner.
Just real quickly, I think actually in many respects this is a stronger reaffirmation by the company and perhaps even by the government itself of its belief that the function of Statoil is to create wealth and to manage that wealth into the future. And the Norwegian government and Statoil have made a decision that rather than allow Statoil to just simply become the manager of a declining asset, namely the Norwegian continental shelf, that they've built a tool. They have a tool at hand, one that's professional, one that's in its own way probably efficient and probably likely to get more efficient, and they want that tool to progress into the international and become successful. The merger with Hydro combines resources that were clearly duplicative, But the interesting thing, ladies and gentlemen, about this is that unlike your traditional US kind of merger, the intent is not to just sack everybody. There's no doubt there's going to be some of that, I suspect. But the real intent is to take the business development teams that are simultaneously working the Gulf of Mexico deep water and redivert part of it so that they can do two areas. And I know for a fact that this is one of the key advantages here. And that's why I suggested in our earlier discussion, ladies and gentlemen, that this is really a continuation of the BP alliance strategy. It is the consolidation of resources to achieve an end that's basically driven by build wealth. And so I think it's an extraordinary example of the kind of alliance mechanism that, again, our speakers were talking about at the very beginning of this conference. I know that's kind of a peculiar analogy, but I think at heart, the merger, in point of fact, is the realliance of the government's interests and of its resources.
And in that respect, the government viewing it as a maximizing of wealth. So the government as a shareholder is becoming much more active than it in many respects have been for a while in Statoil's case.
We have time for one more question, then we need to move on.
Sure. Real quick question for the Statoil gentleman. To your point that Statoil may become and behave more like an IOC in the future than an NOC, and we've seen that that's an increasingly crowded sector going after a shrinking resource. Do you see Statoil continuing to try and grow organically through the drill bit, or do you see them becoming more of an acquire and develop type of company?
I think what you're going to see is Statoil is going to try and pursue a balanced program. One of the essential facts is simply this. I can't explain it. You see it so long in the industry. Going international is the hardest thing any company can do. It's one of the most difficult tasks that can be done. And I don't care whether that's Apache or whether it's LASMO, I'm sorry, LASMO's dead long time ago, a British independent, or whether it's INPEX, or whether it's Statoil. It is one of the most extraordinarily difficult things to do because you're going outward away from your conventional strengths and your experience. To do that, it is almost inevitably incumbent upon that management that it's going to do a blend of both. To be very, very succinct about it, a really good oil company is inevitably not only a good acquirer, but also a good discoverer, or a good exploiter of what they have acquired, in a nutshell.
And I think, for the latter point, I think Statoil, combining the two companies creates a nice combination of two different cultures. Statoil being a more risk-taking culture, in part because it had lower cost of taking risk. The government is a much more a tight supporter of the company than Hydro was, but Hydro being a much better company at project development stage. And so combining the two together, you have a quite nice synergy between cultures. The challenge, of course, will be, will that be successful? Or is it one big brother taking over the other little brother, and then people inside the smaller company actually leaving the company, or whether they will stick with the new company? That's a challenge for Statoil going forward. But I think it's a nice synergy that you can actually get on a sort of organic growth basis. Mm-hmm. And on the sort of acquisition, Hydro has definitely been more aggressive than Statoil, as we saw in the Gulf of Mexico.
Great, thank you. Okay, moving right along into session 7, where we'll be discussing NOCs and foreign policy. Invite Isabel Gorst, she's from the Financial Times of London, up to discuss Lukoil. Thank you.
So, hello. I'd like to begin by thanking very much JPEC and also the Baker Institute for inviting me to speak here. It's great fun to be back and working with everybody again, and still talking about Russia, which has changed rather a lot. before my subject is Lukoil, before I start talking about Lukoil, I'd just like to make a couple of comments about, as a theme of this session is foreign policy and foreign attitudes. Make a few comments about foreign, but basically Western attitudes to Russia at the moment, and how I think that they're not misconceptions, but how there is a flaw in thinking about Putin's Russia and Putin's oil industry. One very widely held view is that Russia was before seen as a great new source of oil reserves that big IOCs could get their hands on and develop, and it was a win-win situation, and that has now dried up under Putin. And the second is that Russia used to be regarded as a reliable source of energy, and that's gone out the window. Both those concepts under Putin, it's actually not so much Putin as the oil price that has, or the price and Putin's policy, there has definitely been under Putin a policy to reassert state control over the oil industry and the gas industry. I don't think anybody would dispute that for a moment. We had Nina talking yesterday about Rosneft and illustrating it very well. But in fact, in the 1990s, it wasn't as if it was an open field. There's never been a great enthusiasm in the Russian oil industry for letting in IOCs, and particularly Lukoil, which is the subject I'm going to be talking about, was not particularly friendly towards the idea of PSAs or to letting in foreign companies into the West Siberian patch, certainly. As for energy security, the reputation of Russia as a reliable supplier has gone since this conflict with Ukraine and more recently with Belarus. And so now people are looking at Russia that they can't rely on it as an alternative to the Middle East. I've lost my thread, sorry. But in fact, what I wanted to say about this was that how this is presented in the West is that Putin is prepared to use energy as a political tool and as a weapon. The real threat to energy security from Russia, or the lack of reliability now, is coming from something which isn't sinister at all. It's something which is actually a happy story, which is growth in demand in Russia for energy. You're already seeing this because of the incredible economic recovery on the back of oil prices. You're already seeing shortages of gas in Russia because demand is going up and Gazprom can't boost production fast enough. And in oil, Lukoil has warned that this is going to happen soon. You've got production going up by just 2%, demand rising, exports aren't expected to rise at all this year, crude. Lukoil has responded by boosting refining capacity and is sort of leading the pack in that way. So that's the end of my introduction. Moving on to Lukoil. Lukoil is the only company in this study which is actually completely privately owned. It's not a state oil company. In fact, it was never a state oil company per se, because it was the first vertically integrated oil company to break out of the Soviet Ministry of Oil and Gas back in 1992. It ceased to have any state ownership at all in 2004 when ConocoPhillips bought the last of the state's share, 7%. And it's got a very large amount of, it's 100% privately owned, very large amount of small shareholders, minority shareholders. I think Conoco is probably the biggest now with 20%. So you could ask the question, why is Lukoil in this study if it's not a state oil company? The answer to that and why we decided to put it in was because it's big, which accounts for the rather prosaic title of my paper, and it's sort of like the face of the Russian oil industry abroad, both because it's the best known, it's the only Russian oil company which has done that difficult thing, which Rich was just talking about, to internationalize, and because it has consistently pioneered Russian oil policy, both inside Russia and overseas. And I think it's important also to look at Lukoil, both to see whether it can survive in the new Kremlin-dominated environment, which I think it can, and also to see it as a picture of how an IOC can survive in an environment which is dominated by NOCs, and whether this means bending or bending to the Kremlin totally, taking certain commercial sacrifices in exchange for certain very, very definite privileges which bear their own commercial rewards, or whether in the end there's a risk, of course, that Lukoil will follow the fate of other Russian oil companies, just get eaten up by Rosneft and Gazprom. How did Lukoil get big, and how has it stayed at the top of the tree so long? It began by being the first to sort of seize assets and set up. It didn't do it through loans and shares like some of the more controversial companies. It just very early on took over 3 production enterprises in Siberia where Mr. Alek Pirov, who is the president to this day, had worked formerly. And he just had the vision to put together a vertically integrated oil company, which he did with a huge amount of success. And there may have been some rough arm sort of tactics in how he got his assets in the first place, but it was a very rough environment in Russia in the 1990s. They've managed to hang on to the place at the top by doing something which no other company did. The other companies were already fumbling in the 90s, and Lukoil had a very clear policy from the start, which was to break out into new areas away from West Siberia, which is heart of Russian oil patch, and explore in new areas like Timan-Pechora on the northwest coast, where they're now working with Conoco, actually, and most importantly, into the Caspian Sea. It was a very unfashionable policy at the time. Prices were low. It's high risk to explore. I think it's very, very likely that they did so with a big nudge from the Kremlin. I mean, Lukoil certainly enjoyed huge popularity in the Kremlin during the 1990s, cultivated contacts with the Prime Minister, Viktor Chernomyrdin, he was Prime Minister, I think, for 7 years, very long-serving Prime Minister. Chernomyrdin was also intimately involved in the oil and gas industry. He was the man who founded Gazprom during the Soviet era. Lukoil also in the 1990s did something which looked very uncommercial at the time and looked Kremlin-driven, which was to buy up a whole lot of completely worn-out and cranky refineries in East Europe, which, quite honestly, no other oil company would have touched. I mean, they were blamed at the time for being an agent of Kremlin policy and rebuilding Russia's empire in the Comecon bloc, which it looked a bit like that, but there wasn't any competition for those assets, and they were bought extremely cheaply. And that is a strategy which has paid off by a mixture of luck and savvy, I think, handsomely, because they've invested a lot in doing up those refineries. East European economies are beginning to grow quite rapidly. Cars are filling the streets. They're making a lot of money there on product retailing. Can it last? Can they stay at the top? You saw in Nina's presentation Rosneft shooting up behind Lukoil. I think there's a lot of sort of feeling in Russia that Putin has said there shouldn't be no company should have more than 20% of production. Well, Lukoil's got 19%. It will be interesting to see how that's adjusted. But so far, Lukoil is growing organically, whereas the big difference, Rosneft has so far grown by mergers and acquisitions, often quite aggressively implemented, such as the auction of Yukos assets. So maybe Rosneft will overtake Lukoil as the biggest. One area where I don't think Rosneft can take over from Lukoil or compete really is internationally. Both Rosneft and Gazprom, quite clearly under Kremlin bidding, are beginning to push out into overseas projects, but they're way behind Lukoil. In the paper, there's a list of Lukoil's international projects. They now span the globe. I'd just like to make a few comments about some of them. I mean, they're most proud. They just made of the move out into they want to get into the U.S. market more and to use Latin America as a source of production to feed the U.S. products market. That's very much in its infancy. That project, that policy, it's moving much more slowly than they would desire. They began by buying up a chain of gasoline stations on the east coast of the U.S. in 2002 from Getty. Absolutely laughed at by analysts at the time, but it planted a Russian flag in North America. It's very, very important for Lukoil to have its flag flying there, and that's seen as a flag of Russia. They now have just made an oil discovery in Colombia, which they will say will be used. They want to find now refining assets either in the US, or there may be some political block to that, or in Latin America to feed a growing retail network in the US. That's the policy over here. In looking at other international projects they have, and just talking a little bit about how those projects can serve Kremlin or foreign policy interests of Russia. Almost all of Lukoil's foreign production, non-Russian production, which is only about 5%, it's nothing for now. They say they'll build it to 20% by 2020. We'll have to wait and see about that. Almost all of it's coming from Kazakhstan, where they have built up 13 different projects. It's more than any other company. They're way out ahead in terms of number of projects. Often working, which I think is very interesting for this study, in collaboration with KMG, the state company which Martha gave a presentation about. So they're big in the Caspian, also big onshore in Kazakhstan. Also in Azerbaijan, they're present in the both BP projects underway there, both the oil and the gas. But notably, they have not joined pipeline projects across the Caucasus to the Mediterranean, BTC and the gas pipeline. I imagine that they were told by the Kremlin just to stay out of those projects. They're seen as anti-Russia projects because they're built really deliberately to bypass Russia, as diversify routes out of the Caspian Sea. The other areas where Lukoil has built international portfolio, basically it's in the countries where other companies, Western companies, have huge difficulty getting into, like Saudi Arabia, Iran. They have Iraq is really a bit off the map at the moment, but they did have a share in a PSA at a huge field called West Qurna in southern Iraq, which Saddam Hussein tore up the agreement in the last days of his regime, complaining that they hadn't done anything, but they're fighting in the courts to get it back. I think, well, there's just a big question mark over Iraq, who will develop Iraqi's oil now, but they recently made a discovery in Saudi Arabia. Just last week, Putin was in Qatar, it's probably no surprise that Oleg Pirov was there with him, signing memo of understanding to cooperate with Qatar. We're getting to a point when Oleg Pirov is going around with Putin, as has Mr. Miller from Gazprom from some time, and signing MOUs wherever he is. And I think this is described very eloquently by the gentleman from Goldman Sachs, is that Russia's policy, Putin's policy, is to reassert Russia as a great global power, not using weapons of mass destruction, but using an energy weapon. And Lukoil's market savvy and knowledge will be harnessed to that end. Whether that's a good thing or a bad thing, we can maybe discuss after the talks. I think instead of looking at it negatively, maybe it's good to look at points of convergence, and by allowing NOCs to internationalize and to form partners internationally, I think this is one of the things where you can break down the barriers so that you have a win-win situation both for IOCs and NOCs, and I hope that Lukoil will be a pioneer in that direction. That's all I want to say.
Thank you. Next up to discuss Saudi Aramco is Amy Jaffe.
Well, Bob Hormats made my job doing Saudi Aramco today easier when he made some offhand remark to a question yesterday where he's saying that people always see some pricing conspiracy or believe that the International Seven Sisters, that any oil company, he says no one oil company can control the price of oil. And I wanted to jump out of my seat and say, but I just did an entire case study on that. Yes, indeed, there is an oil company that is called on to sometimes change the price of oil, and that is Saudi Aramco, and that's a bit what my case study is about. And the interesting thing about looking at Aramco, looking at the modern Aramco, is to go back and look at the history of the company. It's a very interesting company, different than the other case studies. And that is because it was originally a consortium of American companies. And then over time, instead of having the country just literally take the resources and say, you all leave, where it's nationalized, it's us, there was a transition, a long transition, where it transitioned from being an American company to being it transitioned very quickly to being a Saudi-owned company, but the process under which it became a Saudi-run company, pretty much staffed by Saudi nationals, was a slower process, and it retained its very commercial nature. Even though it's an NOC and it does many of the things that we've talked about here over the past 2 days, it does so in a very sort of commercial way. And I think that's what makes it a very different company than some of the other 100% owned state companies. So I thought in just a brief amount of time I would talk a little bit about sort of where is the company autonomous and where is the company not autonomous, and then delve into the kind of foreign policy role it's played. So the role of Saudi Aramco is different from the Saudi oil ministry. The Saudi oil ministry is sort of more seen as the vehicle for setting strategic policy, but as you can see if you read the case studies, it sounds very good. They make it sound like it's all divided up, and it's a little less clean than it sounds because people advise this particular king, King Abdullah, is someone who really trusts and relies on the opinion of technical experts and other support. So, one could make a blanket statement and say that it's a monarchy and the ruling family makes every decision, but in the end, because there's the Supreme Petroleum Council, because there's an oil ministry, because Aramco has a lot of very qualified professionals who can then weigh in with opinion and analysis, the decision process is maybe a little bit more gray than it looks when you look at like what's on paper. But Aramco's main job really is to implement these investment and production targets that are set by the ministry in combination with the other institutions of state. And but the interesting thing about Aramco is that they're given a number or a target or some range of target, and then the company develops a strategic plan, much the way a private company would go about thinking about what's its plan for a commercial plan for the year, and it goes to a board of directors and so forth. And each project that's going to be done as part of this plan to expand capacity, if say that's the mission in a particular year, is evaluated from the point of view of its rate of return back to Aramco. Now, there's some things that have become more political over time. Some of the decisions about who's going to get natural gas in the domestic economy, some of that responsibility has been taken back to the oil ministry because of the political nature of some of those decisions. But I think, if I were leave you with some impression, and this is actually, I've lifted from a direct quote from a speech Ali Naimi gave a year ago. He talked about a good NOC as implementing in the most commercially profitable and efficient manner sort of its mandate with the state assets. And so I took from him, he gave a speech actually at OPEC closed session about how he saw National Oil Company role, and in particular where he saw Saudi Aramco's goal. And he identified three main activities for the NOC. One was, as I mentioned, to set this objective for production capacity in the kingdom, and we've all heard discussion about the kingdom sort of providing this swing capacity of spare capacity that's served a very important role in the global oil market for the past 2 decades. And maybe the number, I'll talk a little bit about whether the number of how much capacity needs to be held has changed since the minister gave this speech. My opinion has probably gone up a little bit, which I'll talk about. But that is a primary role for Aramco. And then the secondary role, which I think is, I shouldn't say secondary, another important role for Aramco is to develop the resources of the kingdom in a manner that would help diversify the economy and develop human resources. And we see that especially in the new initiative like the gas initiative, where there's priority given to developing feedstock resources and electricity and fuel to build the petrochemical industry and other industries in Saudi Arabia. And then finally, and interestingly, the minister said that Aramco sees part of its role to enhance the role of oil in the global energy mix. We don't often see Saudi Aramco talk about that. It's really more handled by statements of the ministry, but clearly this idea that the long-term market matters, that this is a company and a nation with 50 or 100 years of oil supply and not 5 more years of oil supply left, and so therefore they have to care about the long-term challenge of maintaining markets for their product. And so it's interesting, how he laid those goals out. And if you think about Saudi Arabia's policies and Aramco's investments and focus over the last 10 years, you can really see very clearly this policy reflected in their behavior. Now, within that span, in the case study, I go over a few different examples. I mean, Saudi Aramco is so often called on to do some kind of commercial action that is related to the kingdom's oil policy or their foreign policy, that I really felt like I could have to write thousands of pages if I were to track every example over history. And interestingly, when you go back and look at the history of when it was an American company, the company was called on to play a role in foreign policy even when it was a private American company. And we all sort of know a little bit about 1973 and the conflict that the American companies got in when they were ordered by then King Faisal to stop selling their oil to the United States. And so it's very interesting to look at how Aramco has dealt with these similar kinds of responsibilities as a national NOC. And so the paper goes over a couple of different ones, and I'll mention several of them, and then I'm going to finalize on sort of where I see the company today with this priority. One of the ones that's very interesting is a decision made by the kingdom that the United States, that it should maintain its position as the #1 supplier to the United States. And this was sort of more than just an economic policy. It was really actually a political policy to really be seen as having a strong tie and link to the United States. And it was actually kind of burdensome on Aramco because it's one thing to average to be #1 over the course of a 12-month period of the year when the DOE comes out with its final statistics. It's a totally different thing when you're 50 days away from market by tanker to wake up on the 15th of the month and say, oh my goodness, there's 2 extra cargoes being sold down the pipeline from Canada, and we're going to come out in the monthly statistic too low, we better sell a cargo. And so it actually was a very challenging responsibility for Saudi Aramco, and required a lot of market intelligence and pricing acumen. And the interesting thing about it is that when this policy was loosened, which it was in around 2003, the company actually involved itself sort of behind the scenes in the decision to encourage the political powers to reconsider whether it had to be #1 every month, and they sort of looked for an opportunity where the foreign policy looked like it was shifting a little bit, and they could kind of make an opening to talk about the commercial losses that they were having, given how much earning potential they'd have if they could sell the same oil out to Asia. Another case I talk about, because of course Aramco goes through and tries to decide a really very commercial decisions on which oil fields to bring on as they're expanding capacity. And not to sound flippant, but there was a period in time where there was some concern inside the Saudi royal family about the health of the ruler of the UAE, and they had a very solid border agreement over the dispensation of a field that ran across the border. And Aramco was told, right now, today, tomorrow, let's do Shaiba while we can. And indeed, I think King Fahd was right at that time, because now Shaiba is in production and being expanded, and the sons of Sheikh Zayed are saying, geez, we didn't really agree to that agreement. But sort of there's these facts on the ground of the field being produced. But the really interesting, I think, place for Aramco in terms of being involved in Saudi foreign policy is that Aramco really has the responsibility of expanding capacity every time Saudi Arabia decides it really needs to change its foreign policy vis-a-vis its production policies. And so we saw that really clearly in 1990 when Iraq suddenly unexpectedly invaded Kuwait, and Saudi Aramco, which had spent a lot of money mothballing unneeded fields, had to almost overnight demothball those fields and pay the service companies and its own workers double overtime to bring on what was something like 2 or 3 million barrels a day in a 3-month period, which is really pretty short of remarkable. So the interesting thing is what's happening with Aramco now with its capacity drive, because the kingdom is in sort of an expansive mode, and there's been a lot of debate and commentary in the media about whether it's going to accelerate this expansion or make this expansion more of a priority. And so I quote the always controversial Nawaf al-Abaid, who has written a few articles, one of which he talked about Saudi Arabia being the world's central banker of energy, and which I thought was a nice metaphor. And he specifically mentioned the importance to the ruling family of Saudi Arabia of making sure that they had enough capacity to replace the exports of Iran in case something were to go wrong in a conflict in the Middle East, or the imposition of sanctions on Iran, or even a few months ago when the Iranians just threatened to take a hostile action and just pull their oil out of the market over votes at the UN. So again, it had a very interesting impact on Saudi Aramco in the sense that Aramco had an expansion program already budgeted, but it had to go back and look at that program again with a fine-tooth comb, look at the decline rate it was experiencing in its fields, and a new target was set to ensure that extra spending would be made to make sure that the natural decline curve, which for the kingdom runs between 6 or 8%, could be held or contained at something more like 2% or 3%, so that the fields that they were planning to add would really bring them to a point that they could replace all of Iran's exports. So that sort of gives you a sense of, they're a commercial company and they're very competent, and these other things that they do, whether they subsidize local fuel or train the Saudi workforce or some of these other things we've talked about, it really hasn't inhibited the company's ability to just, turn around on a dime and bring a change of oil expansion, capacity expansion. So I think that's what makes them a very interesting and successful company.
Thank you, Aaron. We have one more. Okay. Next up, also to discuss Aramco, is Yoshikazu Kobayashi. The floor is yours.
Good afternoon. I'm Yoshikazu Kobayashi of the Institute of Energy Economics Japan. As the political aspect and upstream of this company was covered by the previous presentation, I will discuss about the downstream aspect of this company. I guess not many people in this conference room has paid much attention to the downstream aspect of this company, but Saudi Aramco is very active also in the downstream these days, and it is of great interest of the Asian oil companies these days because it can have a big impact on the regional product market and trading flows. This is an overview of the company's downstream investments. The upper table shows the refining project, and the lower table shows the so-called integration project, which combines the existing refineries with a new petrochemical plants. As you see in these tables, Saudi Aramco now plans significant expansions in downstream capacity, both in domestic and overseas capacities. I wouldn't go into detail each of these projects due to time constraints, But what I like to highlight here is that most of the projects are planned either in Asia or in Saudi Arabia, except for one in the US. Oops. And also, all of these refining projects contains the construction of a big conversion capacity. Conversion capacity is a process to upgrade heavier crude oil to lighter petroleum products. The sum of the added capacity in a refining project is about 2.0 million barrels per day, which is a very big size in terms of the downstream project. So we see how active the company is in downstream investment. But why is the company so active in downstream? Obviously, as explained in yesterday's presentation by Ms. Jaffe, Saudi Aramco, like other NOCs, have incentives to pursue a vertical integration for various reasons. In addition, the company has now plenty of cash thanks to the recent high oil prices, so the company should feel easier to implement a massive amount of capital investments. But besides these factors, I see there are reasons that motivate the company for the active downstream investments. This reason coming from expansion of upstream sector. As explained in the previous presentation, Saudi Aramco is now working in a significant amount of upstream capacity expansions. But this expansion from the marketing side creates additional marketing needs of crude oil. In other words, Saudi Aramco has to find outlets to take the added barrels somewhere. The figure in this slide shows my personal estimate of the Saudi Aramco's production capacity export balance. This is based on the publicly available information, and Saudi Aramco does not publish this kind of information, by the way. You see the crude oil to be marketed, the amount of crude oil to be marketed in the year 2011, second bar from the right. The company has to sell additional 2 to 2.5 million barrels per day extra to somebody else besides the current customers. And this is one of the major reasons why the Saudi Aramco is quite active in constructing additional refining capacities. Of course, in constructing such new refineries, those refineries should be close to the market, which has a growing demand. That's why most of the projects, most of the refining projects are planned in Asia and in the US. And also, Saudi Aramco has to face a NIMBY problem when it wants to construct a grassroots refinery. This is also the reason why most of the projects are planned in Asia and in Saudi Arabia, and only one in the US and no plan in Europe, because Asia and maybe Saudi Arabia has relatively small this kind of NIMBY issue. But this quantity aspect does not tell the whole story. We have to look at the quality aspect as well. Excuse me. The figure in this slide shows my estimate of each grade's production capacity of Saudi Aramco. Saudi Aramco produces 5 different grades depending on the gravity. From the ASL, Arab Super Light, the lightest, down to the AH, Arab Heavy, the heaviest. The average quality of Saudi Aramco's crude oil will be lighter toward 2009 because of big capacity expansion in Arab light production capacity. But as you see in the blue part of the bar chart in the year 2011, the company will have another big expansion of Arab heavy production capacity. So how to sell this unpopular heavy and sour Arab heavy crude oil is now a big issue for Saudi Aramco. Saudi Aramco needs to secure sufficient refining capacity that can upgrade this heavy grade to a petroleum product that can be consumed in developed world. So we have to look at both the quality and the quantity issue to interpret the company's downstream investment activities. And this is my final slide. What can we say from the company's active downstream investments? First of all, Saudi Aramco will be a downstream major. It is already the largest oil company in terms of oil production, but it will be also one of the largest refiners in the world if all the projects are implemented. This means the Saudi Aramco's influence over the world oil market increases as it becomes a significant product supplier beyond the crude oil supplier. Saudi Aramco will have a more sort of bargaining power against the consuming nations by providing a final product instead of the crude oil to those nations. And one of the points that I want to say in this presentation is the downstream activities go hand in hand with upstream activities. So further downstream expansion may be implemented depending on the upstream expansion after the 2011. The second, regarding the impact of the new refining capacity on oil market, because Saudi Aramco now developing sufficient refining capacity by themselves to process the heavier grade, I don't see the current price spread between light crude oil and heavy crude oil will not become wider from the current level, because that is exactly the reason why Saudi Aramco is quite active in downstream sector. They don't want to see a further discount of heavier grades vis-a-vis a light grade. Regarding the new export refineries in Saudi Arabia, it has a high middle distillate yield. Actually, the middle distillate yield of this refinery is 55%, which is quite high relative to the conventional refinery. So a large portion of the product from this refinery will be exported to European market because Europe has a shortage of middle distillate products. Regarding the new refineries in Asia, of course the targeted market is China, but the Korean project may export some products to the US West Coast too, depending on the physical product balance and relative economics. And finally, a package solution for heavy oil resources will be a potential item for future collaboration with Saudi Aramco. This is very a long-term issue because it seems to me that Saudi Aramco has already developed sufficient measures to deal with the increase of heavy crude oil production. But according to a recent news report, Saudi Aramco may expand further the current heavy oil production capacity, from the 2011. So Saudi Aramco will continue to face this issue and how to deal with the heavy crude oil will continue to be a big issue for Saudi Aramco. So this might be the potential area for future collaboration for IOCs and Asian oil companies. Thank you for listening.
Ask you to stay up here. I invite Amy and Isabel back up to the front. And invite questions from the audience. Do you have any questions? Yes.
First of all, Isabel, let's say Lukoil wanted to make a big purchase in the United States, just oil. Would the Committee on Foreign Investment in the United States and Hill appreciate the fact that Lukoil is legitimately, always has been, legitimately private sector oil company versus the Rosneft? Like that. And then for Amy, Ali Naimi has been an incredibly safe pair of hands, having had both the important jobs, obviously, in the kingdom as the president of Saudi Aramco and now minister. What about succession? What do they have planned to
Are you asking me whether
could Lukoil get away with buying a Unocal?
That Lukoil might get away with it before, say, Rosneft or Gazprom.
Versus, would the Committee on Foreign Investment in the U.S. and more importantly the people on the Hill appreciate the difference between Lukoil and a Rosneft or a Gazprom?
I suspect not. But if I knew that, I would love to know that answer as a journalist. But I'd like to say two things about that. One is there's quite a lot of US shareholders, of course, in Lukoil, including ConocoPhillips. You were probably not here yesterday when Mr. Mulver spoke from Conoco. And he said, he didn't mention Lukoil specifically, but he did say that he regretted, in connection with the Unocal, the refusal to allow the Chinese to buy Unocal, that he regretted that. And he thought there should be a more open policy in the US or he hinted at that, to national oil companies buying assets, internationalizing. And then later in the evening, we had a talk from Goldman Sachs talking about trying to find points of convergence, which is a point I'm trying to bring out in my speech today, which isn't in my paper, actually, that the way forward, I think, is to be constructive and to find ways to engage with national oil companies. Okay, Lukoil isn't a national oil company. I think it would. I think the answer to the question is it would be viewed very much as a Russian company now, and there would be big questions asked. And my last conversation I had with Lukoil before I left, we were talking about the Colombian oil discovery. And previously, when I've talked to them, I'm talking to them all the time. They've been saying, we want to buy a refinery in the US. And the guy shifted his position, and he said, it doesn't matter if it's not in the US, we'll buy one in Latin America or in that region or the Caribbean, and we will serve the US market from there. But we will still serve the US market. We want to be in the US market. It's the biggest and the best. So it's not an answer, but it's my comment.
Okay, on the politics of secession in the Saudi oil industry, there have been some interesting things that have been rumored over the years at different times when there was discussion about changing the administration of the industry. At one point, there was a brief rumor that Prince Saad Al Faisal was going to hold both portfolios, right, oil and the foreign ministry. And there is a really interesting thing to think about. Having Ali Naimi go on to be the minister, and even though he has to function in a more ministerial way, it really sort of narrowed the division line between the ministry and Aramco. And even under Hisham Nasr, there was a lot of activity to try to sort of hold the royal family out of the sector. And I don't mean that by the ruling family, the people who've been in charge, because I think they've really held off a huge amount of corruption that could have come out from behind if you didn't have better leadership. But you could imagine with the younger generation and this proliferation of princes, the potential to have there be a problem. And the interesting question is, if the next generation down, when Ali Naimi does retire, would it be possible? I'm hearing people are more open to the idea. I mean, the thinking on key ministries like the oil ministry and the finance ministry has always been, best man for the job. But what if the best man for the job was a royal, for example? You have a whole generation of very competent royal family members. And so it might change the dynamic a little bit if you had a minister who was more politically involved in the kingdom and less technocratic. And if then, who would come in the administration of Aramco. Now, it used to be said back in the day that, Ali Naimi was the one-man show at Aramco, and he, promoted from within in a manner that he remained a one-man show. But there have been people, I think, that have been groomed to take over, and I could throw out names, but maybe it's not a good idea because I'll start a rumor. So you can meet me in the hallway, and I'll tell you some of the people who are rumored as possibly the next chairman.
I have I guess a apology and a clarification, and I guess I don't have a question though. But on your slide on the depletion rates, Sheba has only been 5% depleted, not 50% depleted.
You know what? I think that might be a typo actually. Let's see.
Yeah, it's the chart we gave out. It's an ascending order of depletion, so it's 5%, the next one's 9%, and so on and so forth. But on the timing of Sheba, what happened was the technology required to optimally develop the field, given its structure, just came into being during the 80s, and that's why it was brought in early in the 90s. I did some support work for the people who wrote up the analysis on that, and it, like the other fields, when we bring them on, is basically done on which field's going to bring the best revenue result for the kingdom. And it was, as an extra light field in the late 80s and early 90s, the best revenue producing field. And so that's why it was brought on. And finally, a clarification. Those expansion projects that were listed in the second presentation are all extra light and light crudes. And so they also are being brought on for financial reasons. Those are the best kind of crudes to bring on. And the refineries have other applications and are heavier production longer term. That strategy, I think, was brought into being a couple of years ago when the market was very constrained for refinery capacity, especially for handling heavier crudes. So to bring on more light crude and to build more refining capacity based on heavier crude was sort of the decision we made to implement the government's policies. Does that make sense?
It definitely makes sense, and I would say that there was still geopolitical concern about the border, right? So, indeed, in Jim's comment, I think is really the crux of the crux, which is that regardless of whether someone from above says, well, I have a political idea, or I've got a geopolitical idea, or my mother had a dream and we should do this field, right? That there really is a rational system for which it's really evaluated. And I think the thing that was very interesting about Aramco, for a company that's got no public debt, that doesn't trade shares on the New York Stock Exchange and all these things that we've talked about, they have managed to institute into the corporate culture this highly disciplined process of evaluating projects, of then having to present those evaluations to an independent board of directors, and having the board of directors ask the kind of questions that would be asked in any boardroom anywhere in the world, right? For a publicly traded company. And that, to me, was why Aramco was really a very interesting case study, because it really shows you that if you have these sort of management processes, right? You have a strong corporate planning department, you have a corporate structure, you have a board of directors, that the fact that you don't have publicly traded shares, because it becomes easier if you have publicly traded shares because people are requiring you to do reporting and so forth, but that you could implement that yourself. If your national goals were such that you wanted your industry not to be privatized, you didn't want to be involved in Western markets, there were all these other priorities you had where you wanted to control your industry in a different way, you could still simulate the sort of management structures that work and create efficiency inside an organization, so that when you have to do these other non-commercial functions like subsidize fuel, it doesn't take the company under the way it did, say, Pertamina.
I want to ask a question about Lukoil, or actually more generally about Russian companies. I mean, our analysis suggested there was sort of this Russian factor for a lot of the Russian companies, regardless of whether they're government-owned or private, less efficient in the way we measured it. Is there an explanation for that? I mean, and I guess the flip side of that is, if you have something like Yukos, which was very efficient, but then it ran into trouble with the Kremlin. Is that part of the story too? That to keep your head down, so to speak, you're not supposed to fire a lot of people and make yourself more efficient?
I don't think that's the case. I've noticed that the Russian companies come out appallingly badly in the chart in this study, and I haven't been into. I want to go through that next week when I'm here. Why? I mean, I know that Russian companies are said to be inefficient, but I don't see why they should be more inefficient than anybody else. I don't quite get it. I don't know if tax has been factored in. I mean, a very interesting thing which is worth bearing in mind about Russian companies and the Kremlin is that they don't make any profit out of high oil prices because of the way the export tax is indexed and structured on an index with the world oil price. So after the price goes above $35, there's just no interest to them, which to a commercial oil company, that sounds like a hideous situation. Companies working in Russia, including BP, put a brave face on it and say when the price comes down, we'll be cushioned. It won't bother us in the least. When $35 is already a very good price, actually it was. 2 years ago, you would have been very happy with $35. And then most Russian projects are based on a price, I think, of break-even price of 15 to 18. So they're doing okay. You don't have to feel that sorry for them. I don't know how heavy, it's very difficult to trace how heavy is the burden now of contributing to social projects in Russia, so-called social projects. Because information on that is quite hard to track, and I think companies do come under very heavy pressure to put money into certain things, which some of us might not think of as being social. But I don't think that would show up that badly in the numbers. I want to look into that. I don't think that there have been massive sackings in Russian oil companies since the 1990s. I mean massive, because the Soviet oil industry was vastly overmanned. And I think now the companies are beginning to pay huge competition for staff now in companies, certainly in the Moscow offices, maybe in the regions less. They're playing Western style standards. I think they're working far more efficiently, very strict rules about turning up, not having holidays. I'd like to go into that.
This is a question for Amy. Back in the early time of Saudi Arabia, the population relative to their production was relatively small, but they've had a explosion in their demographics. Do you see at some point the population pressures and the needs for the kingdom to satisfy the social needs beginning to have an impact on their policies, whereas before they would have been a rather minor part because they had plenty of extra money, but now to keep the people happy, they're going to have to be more careful so that they can't play the same international game that they could play before.
It's a very interesting question, and I look at that question actually slightly more complicated than the way you finally framed the question, because there's really two issues. It's not just, to put it crudely, can Saudi Arabia afford to dump the price and hold it there if it had some need, hostility in a conflict with Iran or, some of the other things we've kind of seen sort of scenarioed out in recent politics. It's not just that issue. It's also an issue because I've described what has basically been a very successful management structure. And there hasn't been tremendous pressure, for example, to overemploy. There's probably some of that, but it hasn't been a really huge social pressure. Or to, create 50 catering businesses that they don't really need to, employ people. So the question is, as the population continues to grow, which people are talking about it, doubling again over the next 20 years, will the company be able to be run as efficiently as it has been in the past? And I think that that's really a critical leadership question. I think the interesting thing about the last time prices were under pressure, you saw King Abdullah stand up and go on national television and say, we have to tighten our belts. And he talked about taking off the fuel subsidies. It was a pretty unpopular decision, and they delayed it. And then, fortunately, the oil price came back up, and that sort of took the burden out of the decision. But there is that trade-off issue, and I think it would depend on how it was portrayed. My opinion is, and this is just an opinion, I'm not predicting that this would happen, is that if Saudi Arabia really honestly felt that security was threatened by a continued devolution of conflict in Iraq, and that conflict spread throughout the Middle East, and Saudi Arabia felt it had to defend its interests. And Iran, instead of doing what it's doing now, which is to come to the table and have a constructive dialogue about how to avoid that terrible situation and the loss of life that would be entailed in that, that if Iran took a really hostile attitude, right, that I think the king could go on TV and say, you know, we have to knuckle down. I mean, we have to tighten our belts. We have to think about our national security. And I think that, you know, Aramco's killing themselves night and day to make sure that they have more spare capacity than they've had in the past, that if they needed to bring the price down, that they could, and they wouldn't have to worry about this issue about, do I have enough spare capacity to get the price down to where I want it to be to, you know, pressure someone, i.e. possibly, you know, Iran. Iran, as Dan Brumberg said yesterday. I mean, this is a country where the pressure of, you know, oil prices being, you know, 40 even, much less 30, could really, you know, crush the regime. And so that's like I have to be able to set that up. And to think that I don't have that option just because I have a rising population, it would depend what the reason is, right? So if I'm going to go on national television and say, listen, the United States has tripled its budget for solar energy and electric cars, and we need to dump the price to $20 and we have to tighten our belts, maybe people wouldn't be so enthusiastic about that. Maybe it'd be hard for them to, you know, look out 25 years and worry about that. But I think if it was a nation at war, then I think that maybe the king could make an appeal where people would view it in a different way.
Okay, one more question.
Amy, well, I thought you were going to say that maybe in Saudi Arabia the right man for the job was really a woman, but you didn't quite get there. So, but my real question is for Mr. Kobayashi. The Saudi Aramco's investment in refining, is that due to a perception that the refining capacity in the rest of the world will not come about, or are they just trying to go down the value chain for higher rent? Certainly, more and more heavy oil on the market is going to be an issue for the market. Did you get some insights into their views on refining capacity in the rest of the world?
I think the Saudi Aramco's refining investment activities purely, mostly comes from the need to process the heavier grade. And of course, they know the many refining projects are going on, but as far as I observe, Saudi Aramco may not think all of the planned projects in other countries may be realized. So at least Saudi Aramco has to secure by themselves for the sufficient refining capacity to process the heavier grades. That's my understanding.
Let me add to that, that I think one of the interesting goals that the company set for itself, and I'm a real Saudi watcher, so I don't even remember them announcing the goal, but when I was working on this project, people sat me down and said, you know, there's really a goal, right? And that was to be 50% integrated. So if you think about, I think Mr. Kobayashi really hit that correctly in his presentation. If you think about a country that is going to expand its production capacity and may anticipate that as demand rises, its production is going to be higher, you know, maybe not this year, but, you know, down the road several years, then that means that they have quite a bit of investment to do in the downstream if they really want to stay at that 50% level.
Thank you.